I am AI avatar of CA Ratan Mundra. India is preparing to introduce a major reform in corporate audit independence regulations. While the proposal may sound technical at first, it could significantly change how companies, audit firms, multinational groups, and consulting networks operate in the future. The proposed Corporate Laws Amendment Bill 2026 introduces a possible 3-year cooling off period after an audit term ends. During this period, outgoing auditors or audit firms may be restricted from offering non audit services to the same company, its holding company, or subsidiaries. This could reshape India's audit and consulting ecosystem entirely. Under the existing Companies Act 2013, Section 144 already places restrictions on auditors providing certain non audit services to their audit clients. These include bookkeeping, internal audit, investment advisory, management services, and financial system design activities. The purpose of these restrictions is simple: auditors should remain independent and unbiased. If an audit firm provides services that influence the financial statements they later audit, the reliability of the audit may be questioned. Therefore, the law already aims to prevent conflicts of interest and maintain public trust in corporate reporting. The proposed amendment introduces a new concept: post tenure restrictions. Even after an auditor's term ends, the firm may still be prohibited from offering non audit services to the same corporate group for 3 additional years. This is a major shift because earlier restrictions mainly applied during the audit engagement itself. Now, the proposal extends the independence requirement far beyond the audit period, potentially affecting future consulting, tax, advisory, and technology assignments. This increases the separation between auditing and consulting activities significantly. Under the earlier framework, the auditor was restricted mainly during the active audit relationship. Once the audit engagement ended, advisory opportunities could resume, depending on regulatory permissions and independence assessments. However, under the proposed framework, the restriction may continue for 3 years after the audit term ends. This changes how firms evaluate audit engagements. Companies and audit firms may now think strategically about whether accepting an audit engagement could block future advisory revenue opportunities. Large audit and consulting firms could face difficult commercial decisions. Accepting a statutory audit assignment may prevent them from providing valuable consulting, tax, technology, or restructuring services to that client group for several years. Global professional services firms are particularly concerned because they often operate through integrated networks offering audit, advisory, and technology solutions together. The proposed restrictions may force them to redesign business models, client acceptance policies, and independence management systems. For Indian companies and multinational corporations, the proposed changes could increase operational complexity. Companies that rotate auditors may no longer be able to immediately use the outgoing audit firm for consulting or implementation projects. This may increase onboarding costs, transition risks, vendor management challenges, and execution delays. Multinational groups that rely on a single global professional services network may need to create separate India specific vendor strategies to remain compliant with the new rules. Audit committees and compliance teams will likely face expanded responsibilities under the proposed framework. Companies may need to maintain detailed records of auditor relationships across holding companies, subsidiaries, and group entities. Organizations may also require new internal controls such as cooling off trackers, prohibited service registers, annual independence declarations, and stronger pre approval policies for non audit services. Governance functions may become far more compliance driven than before. Imagine a company completing its audit cycle with firm A. Under the proposed rules, that same firm may not be able to provide consulting services to the company group for the next 3 years. Similarly, multinational companies using global ERP implementation contracts may need to review whether affiliated network firms are indirectly violating independence requirements. Even audit tender decisions may now consider the opportunity cost of losing future advisory support from major consulting firms. While large firms may face restrictions, mid-sized Indian CA firms could gain new opportunities in advisory, compliance, and transaction support services. Companies may increasingly seek alternative providers outside traditional audit networks. However, there are also risks. If too many firms become restricted from either audit or consulting work, companies could face fewer choices, higher fees, and market concentration. Policymakers will need to balance stronger independence with practical ease of doing business. India's proposed audit independence reforms represent a significant policy shift. The objective is clear: strengthen trust in financial reporting and reduce conflicts of interest between auditing and consulting activities. But the practical business implications may be substantial. Companies, CFOs, audit committees, and professional services firms should begin reviewing auditor relationships, vendor structures, and governance frameworks now. The final impact will ultimately depend on how the rules are drafted and implemented after parliamentary review. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC Excellence, a pioneer in establishing SEZ and IFSC units within Gift City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.